Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs. And then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest. It tells you also that a chart can still fail. And this chart continues to fail at key support lines. And so what this means is there's nothing that's going to be perfect out there. You can't be 100% trader. You never will be. All right. The market is the market. All you can do is get probabilities as high as you can. For me, that's 70 to 80%. 70 to 80% success rate. That's the best I've been able to ever achieve. In the live day trading room, granted, we're in the 90% range, but that's day trading. It's much shorter time frame. We're just jumping in, we're jumping out. But that's what I want to make clear to you guys, is that you really have to understand that you're never going to achieve perfection.
Bitcoin's recent pump excited everyone in a way we haven't seen for a while. If we look at the Fear and Greed Index, we can see the market sentiment changed from fear to greed in the past month as Bitcoin is trying to break the 25,000 level. Yet, Gareth Soloway from the InTheMoneyStocks.com and VerifiedInvestingCrypto.com is not buying the hype and leaves with a big warning that everyone should pay attention to. So watch this video carefully. This bump may be the 65,000 FOMO wiping out everyone all over again. Let's have a quick look at the macro and the S&P to understand what's happening.
We do have the S&P futures trading sharply lower this morning. This is on the back of more concerns about interest rates going up, the economy remaining strong. And yes, you heard that right? Think about this. The economy is strong, so stocks are going to fall. Kind of messed up thought process. But the bottom line is a strong economy means higher interest rates, or at least higher for longer before the Fed is willing to cut. So that again is a negative. If we look at the 10-year yield, and I'll pop up my chart in just 1 second here to take a look at it. In fact, let's do it right now. Let's take a look at the 10-year. So this is the 10-year yield. And the reason why you want to pay attention to the 10-year yield is it's basically going to be inverse to generally what the stock market does. The higher yields go, remember the psychology of it. If you can make 10% in a bond, why would you risk investing in a stock when there's risk of that stock going down? So there's a trade-off, right? Now, some people are going to require 20%. Some people are going to require 2% return on a bond to make it worthwhile to switch out of stocks. But there's a trade-off, meaning that the higher yields go, the more people are going to say, you know what? I have this, potential to make risk-free 5%. Let me not risk my money in Tesla stock right now at these levels. Let me put it for that guaranteed 5%. And that's why higher yields in general are a negative for the stock market, right? It forces money or draws money out of it. This is why in 2021, when interest rates were zero, there was no one that wanted to be in the bond market. Everyone said, hey, why would I be in the bond market for a 0.01 return in my money market or in my CD or in my bank when I could just go in the stock market? Sure, there's risk, but you know what? I'll take that risk because at least there's nowhere else to put my money to make any money whatsoever. And again, bullish consolidation right there, again, on the S&P 500. Now, this is prior to what we're seeing today. We are seeing the spiders dropping pretty sharply. I'm not looking to play this bullish consolidation. Instead, I'm waiting patiently for a retrace to what I call the scene of the crime. What is the scene of the crime? Let's do some education right here. The scene of the crime is basically when you have a major breakout of a trend line and you retrace to that scene, essentially, of the breakout crime. All right, so if we zoom out on this chart on the spiders, you have a pivot high from the all-time high in the S&P, pivot high, pivot high, pivot high, pivot high, and you broke out right here above the blue line. So if we get back to that blue line, there's a swing trade opportunity, not a long-term. I'm not a long-term bull on the S&P, but a swing trade long, absolutely right there. That's at around 393 on the SPY, which is the tracking ETF for the S&P.
Now, let's have a look at Bitcoin and Gareth's opinion on what levels you need to be looking at.
So Bitcoin, guys, you can see clearly continues to run into major resistance. The 25,300 level continues to be the level that I have on the chart that is a sticking point for Bitcoin. All right, the reason it is, number one, you have a beautiful parallel channel right here. Look at the trend line, how it kind of connects through these highs, and then look at how many times we've pierced this line and haven't gotten through. In addition, the highest pivot, this is the highest pivot since the June collapse, right? Since this collapse over here, the highest pivot was at 25,000 approximately 300. So it makes sense that that's going to be a sticking point in the near term for resistance in Bitcoin. Now, again, am I short Bitcoin? The answer is no. In fact, in Verified Investing Crypto, we still have a long on Bitcoin, but I am kind of itching to move out of it and potentially short it. Now, we do have other short signals out there. Over the weekend, I pulled the trigger on an Avalanche short. So if we take a look at Avalanche here, Avalanche had a beautiful kind of move up on the daily, collapse to support, move back up, and then you're basically right into this resistance. So for me, we had already made about 16% on this short prior, and we covered it. Now it had gone right back up to where we shorted it before into resistance. I said, you know what? Let's try a good old-fashioned rinse and repeat. And the idea there is that it's double top, resistance, and also the Bitcoin chart is at resistance. So what I'm doing here, folks, is I'm using Bitcoin as a proxy. All right, so if Bitcoin breaks above that, then that would be a bullish thing for other cryptocurrencies. As long as Bitcoin doesn't break above this area that I've just shown, then in general, that's a negative for other cryptocurrencies.
According to Gareth, unless we break the 25,000 level, this may be a bear market correction, and we still may be dropping from here. You may be in a good spot if you have been average dollar costing Bitcoin for a while. If you didn't, be careful when buying now. And by the way, are you still buying Ethereum?
Ethereum continues to have kind of the same channel lines up here. There's a lot of resistance. The positive on Ethereum, you could make a case that it's making bullish consolidation. It's not the prettiest, right? By no means is it the prettiest bullish consolidation, but it would be classified loosely as bullish consolidation. Now, what does that mean? Well, it could mean we have one more move up to maybe around $1,785 before we hit major resistance. All right, so again, keep an eye out for that. That is a possibility on ETH that you could have one more move up. What would change my mind? See this upsloping trend line that we got below briefly and tag this support. If we start trading back below that, that would negate the bullish pattern, and you'd have to start expecting a bigger move back to the 1,300 range on that chart.
2 days ago, Gareth did another interview where he was already talking about the 25,000 level, and he even gave his targets if Bitcoin would break it. These would sign that the next bull run was starting, so keep watching and take some quick notes so you don't miss them.
So in the short term, yesterday was a very, very important day from a technical standpoint. And what we saw yesterday was a follow through from the previous big up day. And then what we saw was we touched the 25,000 level, actually piercing it. And then the negative was the reversal, right? So I think any technician looks at that and says, okay, that's a topping tail, that's a reversal day. You have to be a little bit careful if you're a Bitcoin bull when you see that type of price action, because essentially what it means is you saw this massive amount of euphoria, FOMO with retail investors in Bitcoin buying in. And then we saw somehow a reversal of epic proportion, which again, wasn't the small investor selling all of a sudden, right? I mean, the small investor's not saying, oh, 25 at the top here. It's usually the bigger money. And so when you see bigger money unloading, you have to pay attention to that. And so at this point, that's a top, right? Now, again, can tops be violated? Can they be broken? Absolutely. But I never want to jump the gun. I want it to prove itself before I go on that side. So right now, you have a top at around 25,300 on Bitcoin. And unless that gets taken out with a daily close, you have to respect that as a short-term top. Near term, I do expect Bitcoin to come back in, and even over the midterm, I still think there's trouble brewing in the crypto market. So I'm not a person that thinks the lows are in yet. I know that may sound crazy to a lot of investors in Bitcoin after this big run, but again, I would just draw my attention. If I zoom out on this chart, you know, this is a great bounce, nothing to take away from it. But in the scheme of the move and in the scheme of the bear market, we have to keep in mind that by no means are we back above major technical levels. Like 25,000 is a technical level. It's a mid-level one. But to be honest, I'll show you where the big one is. The big one is at 30,000 right here. And the reason why psychologically this is a big level is because this was your mid-period of the 2021 bull market, right? This was the low pivot right here. So basically, I'm saying to myself is that if for me to be convinced that the lows are in on Bitcoin, we need to trade above, not just for a day, but I want to see it hold above for a little while above 30,000. And then I would say, okay, the lows are in. But until that, I think this could be a bear market rug pull rally, and I would be very careful.
What could be the lows for Bitcoin if we're still going lower?
I do think we do take out the lows of, I think it was around 15,700, and we probably head down to 12 to 13. I still am in the camp that we have to have max pain in the crypto market. So you're probably talking about a Pierce of 10 to achieve that. That would be where most retail would probably really panic and consider dumping their bags, if you will. So I'm still in that camp. I think the driving force isn't going to be another FTX. Like, I'm not really envisioning that there's going to be a ton more of these major fraud scenarios. The way we get to that lower target is probably with a macro recession, right? So if we think about it, we know that the Fed, and even yesterday we heard from Fed presidents that they were going to likely raise rates further. We saw the PPI numbers are still very hot. And so they're going to keep interest rates high for a long period, at least the entire year. It's very hard for me to imagine that Bitcoin and the stock market can withstand that, and more importantly, that the economy can withstand that.
And to close in, the next bull run may not be the 100,000 Bitcoin price everyone expects. Look what Gareth has to say about this.
So the first thing I would do is I would go to the charts and I say, okay, if we take the high from 2017 and we draw a line through here, we connect these last two high pivots, that would be, I mean, so to me, that's a trend line that I would pay attention to. And if we did get up there, that would probably be a shortable trading opportunity. Now, the question is how, again, it's hard to see where that is. Right now, if we went straight up to that level, it's only around 75,000. And that would be the case if we went, a year out, it probably isn't above 100 yet. So if we go up, if we enter a new bull market, I think you're on the right track there where I don't know what that number would coincide with that formula, but it would be interesting to see, and you might be able to run this, is does this trend line, let's say we hit that bull market in a year, does it coincide with that trend line sloping up on the charts? But I think that's fascinating, and I can see that. I mean, as Bitcoin gets bigger, right, it's gonna be harder for it to go up as much, right? So you have the law of large numbers. You're not going to see Apple go up 10% a day anymore. Whereas a billion-dollar company, it could do that no problem. You don't see that anymore when it's a $3 trillion or $2 trillion company. So I think that has to be taken into account, and that you will start to see smaller bull cycles. But again, they will be bull cycles, no doubt about it.
What do you think? Is Bitcoin finally going up? Or do you agree with Gareth and believe there's more pain coming in? Let us know in the comments below. And please remember to leave a like and subscribe for more. Thanks.